So happy to be with you today. It would have been fun to be there in person. I know how things work, and it's great to be here virtually as well. I'm Brett Stuart, based in the United States. I've got my colleague Simon Quilty logged in here as well. We are the two principals and owners of Global Agritrends, and today we've got a big story for you. It's pretty shocking, and we've both been doing this, Simon and I, each of us for 20 plus years. And there's probably never been a more extraordinary time in the global beef and sheep industry. And I feel like we've worked very hard to get dialed in as closely as we can. And so with that, we're going to jump right into this and take it away. Now, I would tell you, you will have a copy of these slides. Don't feel like you need to write down everything or capture pictures of it. We'll make sure a PDF's available. You'll have all of our information in front of you after our presentation. So with that, I hope you're all well caffeinated. We've got we've got a story to tell. Simon, any comments, and we'll take it away.
No, thank you, Brett, and welcome everyone. So we're going to start with the record prices today, FAO global meat prices that in June were at 139.4, and I believe, so Brett and I truly believe that it is a sustainable price. We are at the start of this journey, not at the end. But if we reflect back at the last time global meat prices hit record levels for beef was back in March 2022 when it was at 134.9. That was not sustainable. And that's because it was COVID, because there were supply chain disruptions, there was short-term money in the market as governments around the world threw money at everything, and there were supply chain disruptions, but in particular, workers, there were bottlenecks. Today, none of those problems or issues exist the way they did. So I guess we will talk more about how and why we believe this is a much more sustainable environment. And then we move across to the sheep meat sector, and it's a similar story. We're not quite at global prices, but we're record prices, but we're a millisecond away from it. And this coming month's figures due out in the next week will show, I think, that sheep meat prices globally are also at record levels. They're up 68% since the lows of October, November 2023. So on every front, when it comes to global markets, truly, I think we are in a period now where the highs of the market are likely to be next year, and we'll talk about more of that, but it'll be probably the sheep meat sector that actually is the first to peak, followed by beef in the latter part of next year. So looking then at our friend here, Donald Trump, the challenge, Brett, is often knowing which part of the round we're at. Is it round 1, 2, or 3, Brett, as we go forward here? So in reality, I think it's all of the above. So in New Zealand's case, when we look at what your situation is with tariffs globally, in terms of beef, you've got the US today at 10%. You've got 0 tariffs into China. Japan, your third largest there at 21.6%. Korea at 13.3%. And 0 tariffs in Taiwan, Indonesia, and other markets. And in sheep meat, there is only one market with tariffs, and that's North America. So I'll hand it over to you, Brett, to give the further update on our friend Donald Trump.
Yeah, and as everyone's well aware, I mean, this story kind of sucks all the oxygen out of the room. But from that election date in November, Simon and I have been trying to navigate and advise companies. We have clients around the world that are involved daily in trade and disrupted by tariffs, exchange rates, everything in between. And this was Simon's counsel early on, and I've adopted it and used it often. And it sounds like terrible advice. The advice is panic slowly, and people say, what does that mean, right? How do you panic slowly? But I think it's been very succinct. The advice is, don't do anything big yet. Be patient. Let's see how this plays out. Over the last early in 2025, We had a lot of Canadians that were terrified. They export 6 million pigs to America, over a million cattle to America every year. They were terrified of what tariffs would do and disrupt their industry. And ultimately, they never received tariffs. And I would say this. For Trump, the bark thus far has been much worse than the bite. The threat of tariffs has caused a lot of disruption, but as we've seen, he's been largely unwilling to really lay the wood to people. He's offered extensions, he's offered the pause, he continues to push deadlines out. He's had a lot of opposition at home. It just hasn't been as bad, I don't think, as we thought it would be maybe from the beginning. Our key agriculture markets remain mostly unfazed. Canada, Mexico, the bulk of our trade is still tariff-free. Japan, Korea, trade is still flowing. Now, this could all change August 1st. We know August 1st is his next big deadline. And the question is, will there be another pause? Will there be another extension? I think foreign leaders' best methods of dealing with Trump are to delay. Just delay everything as long as you can. And if you can delay it another 3.5 years, you get to deal with someone else. That being said, China's ban on US beef remains. US beef is out of China, has been since March. But I don't know if that was really tariff related. That was due to China's safeguard investigation. Although the US was the only one banned, other countries are still shipping. And Canada's tariff on US pork continues. That's one of the only retaliation tariffs we have. The question comes down to, though, what happens August 1st? Trump has said there will be no more extensions granted. He's tried to talk tough about that deadline. We all know maybe, maybe not. Tariffs, heavy tariffs proposed for Japan, Korea, Brazil, Europe, Canada, Mexico. What about Australia? What about New Zealand? It's been very quiet down in your neck of the woods. And maybe, as Simon and I have talked about before, the strategy is just to avoid Trump's gaze. Don't make any comments. Try to keep your head down. Let him focus on other topics and issues. But you got to realize here, Brazil was the number one beef supplier to America in May, 175 million pounds. This tariff would hit them at 76%. So there are some big things that could happen on August 1st or shortly thereafter. There's also the potential for retaliation against US agriculture because they're in the red states that supported Trump. And so agriculture becomes a real key pawn in the global trade war. But Trump's agenda moves forward. What are the risks? Well, Mexico could retaliate. They've already suggested pork and dairy, maybe even poultry and beef. Mexico put tariffs on US pork and dairy in 2018 over Trump's steel tariffs. We had 20% tariffs on pork. Mexico takes 40% of our pork export volume. So we could have some disruptions right here within the North American region. Other retaliation, Canada, maybe. I don't think Japan and Korea will retaliate. They are struggling. Those economies, their currencies have made imports very expensive. I don't think they're willing to pull the trigger, but I would bet, if I had to bet, I would bet that we see a Japan deal in the next 11 days. And it may just be a framework agreement that buys time, but I don't think Japan and Korea can survive 35% tariffs like Trump has proposed. Worst potential wins for America? Well, the Japanese beef tariffs for the US are currently at 23%. If we get something done with Japan, there's a pretty good chance those US beef tariffs would get trimmed. Australia's restrictions on US and pork could be lifted. Those restrictions have been in place for decades, and there's some real concern now about what those tariffs could do to Australia. There could be some movement there to lift those restrictions, although we really don't think there would be any beef flow and very little pork. Tariffs could impede US beef and pork imports, and we have become a massive importer, as you know, particularly with beef. These tariffs can reshuffle the deck, and we're going to talk more about that today. We also could see some new access agreements. Philippines is now a 600,000 ton pork market, Vietnam, UK, others. Thus far, I would say Trump really doesn't have a lot of success to show. He's made a lot of noise, he's made a lot of threats. We have 4 agreements that lack really any detail. The question is, does this August 1st change things? And Only time will tell. So currently, we're out of China. Back in March, China failed to renew all of our beef export registrations. Just with the sweep of a pen, all U.S. beef, pork, and poultry plants were delisted. Now they relisted pork and poultry. They did not relist beef. So in China, there are really only three sources of grain-fed beef globally. U.S. and China are both banned, or U.S. and Canada. Canada's been out for 3 years. U.S. is out. 1/3 of Australian production is now grain-fed. That's the only game in town for China. And Simon, the phones have been ringing, right? The Australian demand has picked up as China is scrambling for grain-fed beef. Now, the Chinese officials announced a safeguard investigation last December, alleging that imported beef harms their domestic beef prices. We're expecting some news here in August. We'll talk a little bit about what some of the chatter and rumors are here in just a bit. But if you look at that safeguard investigation, China has rapidly become the largest beef importer on earth by a wide margin. And 2025, they're still up another 20%. It is growing quickly. We've run the data and shown it's very easy to prove that actually domestic beef prices went up the entire time that these imports went up. So I don't know if they can really prove that. I don't know if they really care. It's fully expected that we're going to see some type of safeguard quota coming from China. And so, Simon, what are your thoughts on that, and what are you hearing?
So, Brett, in the last week, the rumor mill on what potentially could happen has been well and truly alive. So we've got potentially, the 2.87 million tons of fresh where potentially quota could be put at. But where there's once the talk of a country-specific quota or safeguard per country, now the talk is of a global quota, meaning that effectively first in, best dressed. That's a concern for Australia, for New Zealand, for everyone, because really the one country that can take advantage of that is Brazil. Those that can produce large volumes in a very short space of time. So, and then on top of that, there is talk that once that trigger is met in terms of safeguard, then there could be prohibitive tariffs of about 80%. Now, these are very much early days. We know that last week, Prime Minister Albanese was in China and personally raised his concerns about this import quota safeguard system going global instead of country by country. But for what it's worth, Brett, at this stage, we believe that the talk of global quota seems to be getting more resonance than country by country, which is to our detriment and to New Zealand's.
So, Simon, I'm not sure most people understand. Australia is the only country right now in the world that has a safeguard with China.
That's correct, Brett. Sitting at 208,300. So this has been in place for, at least the last 6-8 years since our free trade agreement. Brett, once we trigger that, which is likely to be in mid-August, we then go to a 12% tariff, known as the most favored nation tariff, which is a fairly ironical name. There's nothing favorable about it at all. But last year, we triggered the quota back in October. The problem is the earlier you trigger your quota or your tariff and the safeguard, then what's produced on the water at the time is taken off your next year's allocation. So effectively, you tend to get into this cycle of triggering the quota earlier and earlier each year. And so unfortunately, this year, it's going to be August for Australia. And so that thereafter there, we are at 12%. It does create, therefore, opportunities for New Zealand in that space as well.
So this is the biggest meat importer in the world. The biggest beef importer in the world is China. Now let's talk about the biggest beef exporter in the world, Brazil. So Trump came out and said, we're going to 50% on Brazilian imports. It was a big announcement, and he sounds a little bit angry about it. Now, this would add to the current 26% tariff on Brazilian beef, taking them to 76%. We know these prices are high, right? We know where the prices are. 76% is untenable. Now, Trump came out and linked this to Brazil's prosecution of former President Jair Bolsonaro. Trump called it a witch hunt. In reality, Brazil is actually has a trade surplus with the US. They're buying more from the US than they're sending. So kind of an interesting spot, but you got to realize Lula da Silva, president of Brazil, and Donald Trump could not be further apart. Ideologically, da Silva's a liberal, Trump's a conservative, kind of, but these two, I don't see them getting along. So that's why I think this could really happen. Trump also cited trade imbalance. He's concerned about Brazil's alignment with the BRICS. You've seen Trump's threat against the BRICS and those who do business with the BRICS. I think this is a lot more ideological than simply about trade balance with Brazil. And because of the polar opposites here, I really think this could go through. Now, this is a big deal, Simon, as we know, right? Brazil has been shipping massive amounts of beef to the US.
So, Brett, when we saw, phase, let's round one, round two, round three, we spoke of, but when Brazil filled their quota, you added the 10% to 26.4, so they're at 36.4%. We saw shipments start to fall away pretty dramatically there. So up until the end of May, they were 118% up on last year, 175,000 tons. But really, in the last 3 months, the volume has started to fall because of the impact of these high tariffs. And now we're talking 76.4% as of August 1st. For what it's worth, New Zealand imports up till then was 79,133 metric tons, and Australia at 157,959. I guess, Brett, to me, the clear message here is that I think once you look at the sums and as we move to the next slide, it's pretty clear to me that from a Brazilian point of view, at 76.4% duty, it simply doesn't stack up to export to America. In actual fact, between the cost of shipping to America versus China, you've got almost 4,300 US dollars per metric ton cost. Therefore, the incentive will be to go to China. So, Brett, I think the message is clear that each time this duty went higher in terms of where Brazil was at, we saw shipments starting to move away. And I'm pretty confident in our call to say that really shipments into America at that very high 76.4% would almost come to a standstill.
I agree.
So, Brett, we then look at the price spread between New Zealand imported 90s and fresh 90s. And today they sit at about 61 cents a pound. So, Brett, once we take away Brazil, which is traded normally at about a 10 cent a pound discount to New Zealand and Australia, I think that we'll see that price spread between fresh 90s and imported Australia, New Zealand narrow significantly. And we're going to see, I think, the imported price move higher and probably be within about a 10 to 15 US cents a pound reach of those fresh 90s prices. So I see it as very positive. Already Brazil has started to push back, talk of retaliatory tariffs on America. So, Brett, I'm with you in saying it's probably very likely, and the impact, I think, will be very positive to New Zealand exporters.
So everybody that's been involved in this beef industry, and especially with the US imports and 90s prices, know what happened in 2014-15. We had a very short, sharp price spike that really took those prices higher. And so, Simon, how does today's fresh 90s price, how does that relate with what we saw in 2014-15?
So, Brett, the fundamentals of then and today look so similar that I couldn't help myself and overlay the two periods. And it was unique because back then in 14-15, fresh 90s went to the equivalent today of 260 to 260. Sorry, it was 460 to 465, And to me, it's indicative of potentially where we're going to head. And what was interesting is that instead of having a seasonal peak around August and it then fell away, in actual fact, for an entire year, it held at those record levels. And what happened was it was the tightness in US cow that got the prices where they were, but you might say the baton was handed over and it became the tightness in fed cattle in America that ended up keeping the prices that sustained. And the impact there is when we talk of the round cuts and all the other components that go into the meat pack, they also tightened up in the fed cattle and helped sustain that price at record levels for an entire year. I can't help feeling that we may see something similar. Will we get to the 460, 465? The next 4 to 5 weeks will tell. But for what it's worth, Brett, I think we're in for a similar period.
Boy, those are some lofty prices. That is incredible. So, Simon, here's the question. Will this lead Brazil to fill other markets, thereby impacting New Zealand elsewhere?
Brett, my feeling is that we are likely to see that the displacement out of Brazil will be somewhat minimal in the sense that China is where most of it is likely to go. But Brazil does not have access to Japan and Korea, which is number 3 and number 4 market for the New Zealand exporter. And you've got also the US. So there's three of the major 4 markets that Brazil won't be really getting access to because of the huge duties into America. So China will see more Brazilian beef, but it can handle it. And keep in mind that America remains out of that market as well. So it has created space, you might say, for the Brazilian beef. But also, Brett, we're of the opinion that we will see a herd rebuild in Brazil next year, starting in 2026, that will help tighten supplies as well. So overall, I think that there will be minimal damage with the impact of Brazil not accessing the US market.
Okay. So let's shift gears for just a minute. New Zealand, Australia continue the backfilling, but here's another story. The US herd rebuild is underway, and that's not confirmed. This is our expectations, and as we know in the US, we have these big cattle cycles. They're very predictable, and you really don't know they're underway until you're looking in the rearview mirror. So we're making a call here that these are underway. But when you hear about these high US cattle prices, take a look at this. So this is 550 weight steers or 250 kilos, 750 feeder cattle, 750 pounds or 340 kilo, or our fed cattle. These are our fat cattle for slaughter, 680 kilos. That's a US price per hundredweight, but I went and ran this in New Zealand dollars per head. So our 250 kilo calves are now selling New Zealand 3,500 per head, feeders 3,900 per head, and our fed cattle are now 5,600 New Zealand dollars per head. That is incredible. And it's just as incredible in US dollars. It is unbelievable how high these prices have went, how quickly. And what's most shocking about all of this is our supplies are near record high. This isn't coming on tight supplies. If you look at our production plus imports, we pretty much have as big a supplies as we've ever had. So the point of that being, this rally, this price rally has been demand driven. If you look here at the last 6 years, we've had very stable per capita supplies. Those blue bars, that's how many pounds every man, woman, and child in America's had. And even with stable supplies, we have seen that retail beef price surge higher. Now, normally in a cattle cycle, this is what you see. You see declining supplies and rising prices. My point here being, the only explanation thus far is demand. This is a demand-driven market, which is shocking. It's like nothing we've ever seen. And where this gets really exciting is what happens the next 2 years as we see those supplies drop. So as the rebuild begins, supplies drop. As supplies drop, prices go higher. And that's hard to accept. I've got a lot of clients in America here they have a hard time when I tell them prices are going higher. They just can't believe that. But prices don't go lower when you cut supplies. And it's all about this cow cycle. So this is the cattle herd cycle. It's based on biology, the US production system, and you can see those cycles. They're different shapes. This is 100 years of data. And so I show this chart, and I've got a lot of people that tell me, well, it's different this time. We're not going to rebuild this time. Land is too expensive. Ranchers are too old. It's different this time. And I show them this chart and I go, there's 100 years of data. Is it really different this time? We will find the prices as high as they need to be to rebuild. And we're not there yet. As crazy as this sounds, the prices are expected to go higher into next year. And so, how do we gauge that? There's a couple of key indicators. One is the heifers as a percent of our cattle in feedlots. The calf price highs come when that metric bottoms. Now you can see there in April, we just hit 37.6. This is a quarterly report. We actually get the next report next Friday. Next Friday, we'll get another number for this. And my guess is that number is going lower. But one thing you got to realize in the US dairy space, there has been a huge use of beef on dairy genetics. The dairies are using sex semen. You guys are doing it down there. Sex semen for the female calves. The rest are AI'd. As we all know, beef on dairy makes more heifers. And in the US, we probably have about 3% more heifers than we did historically at this time, which means that metric is actually probably down closer to 34%. And so this is a bit of a head fake. People haven't realized this, but this indicator is flashing red. Here's another indicator. Bred heifers less the equivalent price of a feeder heifer. A feeder heifer is just a heifer going into the feedlot versus a bred heifer. What does this chart tell us? The market is screaming for more bred heifers. We're $1,200. If you have some heifer calves, if you're willing to breed those heifers, they are worth $1,200 more. So what happens? Anybody with grass starts breeding heifers. And our weather condition is much improved from the last 5 years. And so that's why we believe this thing's on its way. So how does that work? Where do prices match with inventory? If we look at the beef cow herd, the blue bars, and the calf price, if you look at the absolute bottom, and not just the bottom in the cow herd, but when it ticks higher, the year that that herd ticks higher is usually the high in the calf price. Well, 2025, the herd was still in decline. 26 may tick higher, which would suggest 26 is potentially the high in the calf price. But like I said, we haven't done this on tighter production yet. Now, one thing just happened here in the last 4 months. Our year-over-year change in beef production after years of anticipation is actually finally declining. We're running 5 to 7% now below a year ago. People have anticipated this for a long time. It's actually finally happening. We are starting to tighten the supplies. And so with that, with those other indicators, I believe the rebuild is underway. And 6 months from now, it'll be easy to look back and make that call. Right now, it's a little tougher call to make. But this has a knockoff effect that affects New Zealand. It affects Australia and others. Simon's going to tell us about that.
So, Brett, we've seen as a result of those tightening situation that US chilled exports over the last 3-4 years have dropped 26% in 5 years. So the net effect is that not just chilled, but frozen, if we go to here, we saw the biggest decline there over 2022-23. It's kind of in a holding pattern today, but nonetheless, frozen grain-fed exports as well out of America is down 21%. So it's not just America that creates the opportunity for New Zealand exporters, but it's globally where America is not putting the beef that it once did that creates opportunities as well. And that tighter protein, I think, also has a big impact on the sheep meat demand as well. So backfilling is what we're doing. Both Australia and New Zealand are filling the holes that's been created by America. And we can see this in Japan. In the last 3-4 years, exports are up 13% out of Australia, New Zealand, and out of America, they're down 22%. We're filling the void in Japan. In Korea, a similar story, up 17% in volume compared to America that's down 22% into that market. And China, a similar story, up 17% versus the 24% decline. And in all the other markets, it's a similar story, up 40% versus a 27% decline out of America. So Brett, we're backfilling, and it plays a crucial role. And importantly, we're at backfilling at higher money. And Brett, I think one of the other key indicators that talks to me that there's going to be higher prices into next year is the value of fed cattle in America. And when we overlay that again with 14-15, you can see the uncanny resemblance. They are obviously at different levels in pricing today, but given that in mind, I think it sees the peak, if history repeats itself, in about June, July next year. And Brett, we're talking another 20% upside in pricing between now and then in that US market. So Brett, as we said earlier, it's the tightness on cows today in America, but as we go into next year, it's the tightness of fed cattle that really helps drive these prices, not just within America, but globally. And Brett, when we look at the influence of sheep meat, so what jumps out at you, first of all, Australia and New Zealand together make up 80% of global exports in the sheep meat sector. In terms of production, Australia is slightly double what New Zealand is overall. And in terms of sheep meat exports, around about 65% higher. So, Brett, truly both countries, influence each other. And what's important here is the tightness of supply that's in Australia. But today, as we speak, record heavy lamb prices in Australia at 11.12 Aussie dollars per kilo live weight, trade lambs at 11.08 Aussie dollars per kilo live weight. And to me, this all points to higher prices in New Zealand as well, given how much we share. Tighter supply in Australia is expected going forward. Year to date, year on year, Australian lamb is down 15.4%. On mutton, we're down a whopping 35.7%. And Brett, to me, this all points to higher demand because of lack of supply out of Australia, and that once again, buyers around the world are going to turn to New Zealand to fill the void because of the lack of supply out of Australia. Brett, when we look at the Australian landscape, we've seen 9 quarters of liquidation. So we measure that by the ABS, Australian Bureau of Statistics, but at that 2 million quarterly slaughter number in Australia, when you sit above that, we are liquidating our breeding flock. And you can see that in the last 2 quarters, 3.5 million head were slaughtered of older sheep, 2.9 in the March quarter. Brett, it really points to, I think, an extraordinary tightness coming forward over the next 2 to 3 years for Australian mutton and lamb, and the New Zealand market will be truly the beneficiary of it. And when we look at some of the key global markets, but in particular North America, lamb legs so far year on year up 40% in value. Lamb shanks are up 37% in value. When we look at square cut shoulders, up 23% year on year, and French racks up 18%. But Brett, the other big winner is lamb mince. It's up 21% in volume and 20% in terms of overall revenue. So Brett, I think if America is any key indicator of what's going on globally at the moment in the lamb sector, the signs are very good indeed. And let's stop and dwell on the New Zealand supply situation. So we've got the overall lamb crop. The number slaughtered this year is down 8.5% versus the forecast by Beef and Lamb New Zealand of 6.9%. And when it comes to mutton, it's up 7.3% versus the expected decline of 7.1%. Brett, to me, this is a sign of liquidation that the farmers within New Zealand have had challenges, particularly, I think, in the sheep meat sector. You've had incredibly high input costs. You've had competition from forestry, but other land uses. And we know when it comes to wool and meat, the two sources of income, wool has really struggled. So to me, this really highlights some of the challenges you have in the processing sector where there is an exodus out of the industry and a liquidation that's been going on. In the beef side of things, Brett, though, I don't think it's been as dramatic. In beef, steers are down 10.9% year to date in terms of overall kill. Heifers are up 4.8%, cows are down 6.9%, and bulls are down 4.7%, and overall down 5.2%. Brett, I think we did see a lot of liquidation over the previous 2 years, but that momentum has slowed. And the good news is that when it comes to bobby calf, and it's early days in terms of the bobby calf season, but the numbers are down 14.5%. And Brett, I think that's the first sign we've really seen of potentially an expansion is not far away or an improvement in supply. And so 14.5%, it means that we won't see that crop, you might say, appear on the market at least another 2 years, but at least we know that the pipeline hopefully is refilling as we go forward.
Great. Well, you talk about that, Simon. We are in a unique situation with pipelines rebuilding around the world. And like I said, we've been doing this 20 plus years. I have never seen a situation quite like this. If we look at the global beef cow herds, the top eight, that's the vast majority of the cattle in the world. Look at what that herd's doing right out through 24, 25. We have global cattle cycles in sync, and it's due to different reasons around the world, most often weather, but sometimes markets. Herd liquidation is leading to sharper price hikes in the US, into Australia, Brazil next year, Argentina, Uruguay, Canada. We have seen some massive slaughter rates. Q1 Brazilian slaughter was up around 25 to 30% over a year ago. That is a sign of liquidation. And so Brazil's been through this liquidation. A lot of indicators out of Brazil suggest by next year they're moving into restocking, which tightens the supplies, not just the US, but also Brazil, like Simon showed you, also in Australia and throughout South and North America. So 25, 26 will really see the tightest beef supplies and again, new record prices as restocking begins around the world. Now, the question I get most here in America, Simon, is this. Are Americans done? Have we priced beef out of Americans' reach? And my response is, we'll know the day we do it because they'll quit buying it and we'll have to throw it away, right? These prices are clearing prices. Look at that retail beef price, $8.63 a pound. If we go back the 4 years before COVID, beef prices are up 51% from that level. And I'll tell you, Simon, it's shocking. I go into the grocery store. Meat is a perishable item. You sell it or you smell it. And it's selling every day. Ribeyes, $16, $18 a pound US. That's the clearing price. And the reality is they are not done yet. I just saw some data out of the Wall Street Journal today that suggested this US economy is starting a new resurgence, that it's not going into recession, that it's a fairly durable economy, and there's probably some more upside to this. As shocking as it is, Americans are not done yet. However, when we go through these cattle cycles and tighten supplies, there is a very obvious beneficiary, and it's our feathered friends. It's the poultry industry. Take a look at this. In the US, if you put on your restaurant hat, if you're running a McDonald's or Wendy's or Burger King, one of the former burger joints, the 90% lean price is typically 50% more than chicken breast price. That's your long-term average is beef 90% lean, 50% over chicken breast. Today it's 222. What happens when you get that really extreme spread? And we spent all of 2024 at an extreme level. Well, you get McDonald's saying, we're going to bring out the chicken Big Mac and we're going to offer chicken strips. If I drive through a Wendy's restaurant in America, all the pictures on the menu today are chicken nuggets. So these guys have no incentive to sell hamburgers. They want to sell chicken. They simply cannot sell hamburgers profitably. And so one thing we're seeing is the former hamburger joints are becoming chicken joints in America. They all want to sell more chicken. And in the result is we lose a little bit of market share every time we go through a cycle. The other opposition or the other supply that feeds this, as we've talked about, is that import. Now, in 2011, imports were about 2 billion pounds. We're going to be 4.5, 4.6 billion pounds this year. Unbelievable. And that has really been right into that fast food grind. And again, what are the markets telling us, Simon? We've got record high prices. The markets are saying, send us more. So how does this look in a cattle cycle? I told you the recent prices have been demand driven. We're going to go supply driven next year, but this cycle will turn. 2026, I believe, in America, we will see the tightest supplies, the highest prices. 27, 28, prices begin moderating. That bigger herd starts producing more beef, prices fall. 2030, probably about the bottom of the cycle, liquidation begins and we start pouring beef into the markets. 2032, 2034, the prices bottom, liquidation ends, and we start the cycle over again. The last two cycles have been 10-year cycles. You could set your watch by them, the last two cycles. If we do that again, this is kind of what it's looking like in terms of a cycle. Simon, tell us your thoughts over on the lamb side as far as a cycle for Australia.
So I guess with all the optimism, and I'm very aware we're short of time, so we're going to quickly go through the last round of slides here, but it's the boom bust cycle in Australia. And this is the important caveat to these extraordinary global prices and tightening supplies. But inevitably, when you tighten supply enough, you drop supply by 34% in Australia. If we look at the last 5 years, then it's impossible to retain the workers for 2 years of no supply. And suddenly, because the lamb industry is so efficient, we turn the tap back on, and before we know it, in 2028, we could see another 35% come back onto the market. And Brett, to me, this is one of the challenges going forward from a New Zealand point of view, is that we know we can do damage from oversupply in Australia, and 28 really is the year to watch in terms of potential oversupply in Australia. So there's the important caveat. Brett, let's quickly move forward here.
Okay, one other thing that can tighten supplies, and I'm going to just hit this quick. Mexican screwworm. There's a fly that causes screwworm infections. It's come up through Central America. It's now in Mexico. The Mexican border is closed. That restricts about 1.2 million feeder cattle per year from the American market. That is 5% of our annual slaughter that is now restricted. And the bottom line is they are struggling. They cannot get control on it. The reality is this is an issue that's here to stay. It's not going away. The system to control it has failed. Some suggest it'll be in America by the end of the year. But the very next question I get is, will a U.S. screwworm finding halt beef exports? And the quick answer is not likely. I mean, Mexico's had screwworm here for a year. They're still exporting to Japan, Mexico, and others. However, we could limit our live cattle exports mostly to Canada. But that's just one other thing that's tightening that belt one more notch is screwworm. So Simon, over to you as we wrap it up here with our livestock price forecasts.
So Brett, let's reflect back on where we started today, and that was FAO's global beef and sheep meat prices. And history's shown us that often sheep meat is the first to peak, followed by beef, which is about 2 to 3 months later. I'm of the opinion that we're going to see probably sheep meat prices peak in July next year, and beef will follow probably by October, November, as all the characteristics of today play out. tight supply, and strong demand. So Brett, for what it's worth, I think sheep meat is the first to get to those record levels next year. Brett, when we look at the relationship between Australian lamb and New Zealand lamb, it's about an 80% correlation. And as tightness in Australia occurs and prices lift here, I think we will see something similar in New Zealand. I'm expecting this August that the higher the market, somewhere around $10 to $10.50, then a seasonal decline. And next year, you can add another 50 cents to a dollar to June next year, July. It'll come slightly earlier, as we've just said, as global prices meet their record levels. Brett, we also go then to with situation on beef. We share so many markets, Australia with New Zealand. It's an 88% correlation between our heavy steer prices and New Zealand prime steer. Brett, I'm of the opinion that this year the peak is to come in August, and we're not far off there now, but at around $7.95 to $7.98. It to ease a little bit with, once again, seasonal supply to come forward. But as we get into next year, Brett, new record highs in October, November next year. So Brett, there's some thoughts on where prices are. I'm expecting 25, 26, probably to be a 15% above where we're at to this year. Brett, I think both processors with higher returns globally and farmers with better returns, I'd like to say, all are going to benefit from it. So let's conclude. Brett, just starting with our overall outlook here, a 50% US tariff on Brazil will strengthen imported 90 CL and cow prices. New Zealand beef items for the US are essential tariffs and are likely, I think, on lean meat to be passed forward. Australian supply of beef and sheep meat will tighten significantly in 2025, and New Zealand will be the beneficiary. Number 4, global demand is good, and Australia and New Zealand role in backfilling increases in beef, and in sheep meat, it will be New Zealand backfilling on Australia to get the full benefits. Key supply cycles, as Brett spoke about, in Brazil, Australia, and the US, as each goes into a rebuild and supply tightens. And forecasts, New Zealand prices to rise, lamb $10 to $10.50 this August, next July, August, probably $10.50 to $11. And lastly, with or without tariffs, the fundamentals are strong, tight supply and strong demand.
Excellent, Simon. Great discussion. I hope that was of value to the group here, and we will wrap it up. If you have time for questions, we're happy to take time for questions.